Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve. This is Stock Market Today for Thursday, December 26th, the day after Christmas. And today I'm joined by my longtime colleague and news editor, Ed Carson. Quiet day for the stock market today, but somehow Ed found three stocks to watch. What do you got for us today, Ed?
Yeah, want to take a look at Burlington stores, Boston Scientific, and Vertex Inc.
Okay, very good. Well, I'm going to start by sharing my screen here, and let's get right into it and take a look at the NASDAQ composite. And here is the NASDAQ composite, which, just basically closed unchanged from the prior session, still holding around this 20,000 area. I'll tell you what, Ed, that after that big downdraft last week on Wednesday, NASDAQ really didn't take too long at all to right itself here.
No, it did not. Things are continuing to look solid after the half-day session where the NASDAQ had a solid gain, basically held those gains. We had modest losses sort of starting off the day, and then we but closed essentially flat on the major indexes. So this didn't really change anything. I mean, there was a lot of quiet action. Small caps outperformed, but I don't think this is everything just sort of stayed where it was, which is what you expect late at the end of the year. You don't expect major moves going on.
Yeah, it's hard to believe only three trading days left in 2024. Here's a look at the S&P 500, which also sold off pretty sharply last week, regained the 50-day moving average, and is back above the 6,000 level. Breadth still isn't great on the NYSE and NASDAQ, but S&P 500 right up near its high with the NASDAQ.
Yeah, and it bounced off its 21-day line, so that was nice to see. I mean, the S&P has been nice this week, whereas the NASDAQ was already sort of above some levels. S&P bounced off the 50-day line to start the week and has then got above the 21-day line, holding that. So that's positive.
Okay. Slightly different market for small caps and blue chips. Both of these indexes have been kind of moving alike. Both are well below their 50-day moving average. A nice day of outperformance for small caps, but Ed, some damage done to the Russell 2000 and to the Dow, which we'll look at in just a second.
Yeah, so nice move. It's moving back toward the 50-day line, but it's not there yet. And I think that's something to keep in mind. It's still a divided market. There's plenty of stocks that are setting up. There's plenty of stocks that are moving and doing well. There's some stocks that are setting up. So there's reasons to be invested and heavily invested in this market. But at the same time, the Russell and the Dow and a lot of these other equal weight ETFs are still below their 50-day line. And so it's just something to note. It's not the beginning of the rally. It's a divided rally. So it's just something to note. It's a little more unstable. Yeah.
Definitely a market that is being led by the S&P 500 and the NASDAQ. I did want to just talk about the 10-year Treasury yield, which didn't move a whole lot today. But Ed, maybe you can just give some perspective to people as to why rates are heading so high here, and why is the market used to be spooked by rising interest rates. The market's done pretty well, even though that 10-year yield moved powerfully off of that low around 3.6, and just recently went over 4.6 today. So far, the market seems to be taking it in stride.
Yeah, so far it has. I mean, you never know when that's going to happen. It's sort of like this kind of thing where it builds and it builds and it finally, the market might react negatively to it and might react negatively for a while, but it hasn't happened yet. It's hitting. It was getting above some May highs. It's not far from 2024 highs. There has been some stronger economic and inflation data. Now this week, not so much. I mean, the data's been sort of mixed. If anything, you could say a little bit weaker than expected. But nonetheless, yields have continued to rise. There could be people looking ahead towards Trump's economic policies, which we'll just have to see how that shakes out. But the market is trying to anticipate that. But this is important. I mean, can stocks keep going up? I mean, obviously, there's a reason why RSP and QQEW and the Dow and the Russell are still below their 50-day lines, and I think the Treasury yield are probably part of that.
Yeah, this is a look at the equal weighted S&P 500 ETF, and another index we don't talk a whole lot about, but the NYSE composite, also indicative of sort of this split market. This was one of the first indexes that went below its 50-day moving average. So, some headwinds out there for the market, but overall, indexes are near highs. As I'm reminded of the home builders, Ed, there was quite a period of time where they didn't seem to be too concerned about rising interest rates, but only just recently did they finally start to sell off as that 10-year yield went over 4.5. So we'll see. We'll see if the market can continue to hold up here. Any other interesting ETFs of note today that you wanted to look at, or we just want to get into some stocks here?
Let's get into some stocks.
Okay, very good. How about let's see. Why don't we start with Boston Scientific? This is a large, liquid, maybe a defensive name, or definitely a defensive name in the stock market. Up near highs. What's to like here?
Well, I mean, it's defensive, but it has a little bit of acceleration in the last quarter. This is what I would call defensive growth. In terms of medicals are often defensive growth, where it's somewhat relatively insulated from the economy because, hey, insurers or the government is going to pay for most of this stuff. It comes down to it. But here it is, Boston Scientific. It sort of bounced off. It's been bouncing off the 50-day line the last few days, bouncing off the 21-day line the last couple of days. It's basically, so it's off the 50-day line. It's done that a couple of times, but if you look on a weekly, it has some tight action. It's right on the verge of having a flat base. So it's, I think, 1 day away from having a flat base, but definitely you probably could have bought it today. You could buy it if it actually took that little tiny step above the left-hand side of this emerging consolidation. Just a way to provide some leadership without getting necessarily involved in, with everything being an AI.
Yeah, I was going to say out over the skis in data center and AI. So healthcare in general hasn't been performing well, but certainly names like Boston Scientific, fighting a good fight here and holding up near highs. Been talking a lot about the strength in consumer stocks as well. Several retailers continue to outperform. So let's take a look at one of the better fundamental stories in retail, in my opinion. Burlington Stores used to be known as Burlington Coat Factory. This is a nice setup as well here.
Yeah, a number of discounters are doing well, and this is definitely among them. It's sort of still on a weekly chart. It's been trading pretty tightly, found support a little bit above the 10-week line. It's on track to actually have a flat base after this week. So that would be a new buy point as well. On a daily, you can sort of see this as well. It's like been trading in a buy zone basically for weeks as it's been consolidating. So you could treat this flat base almost like a shelf to the prior buy point. But so you could have bought it here. It sort of broke a very short trend line, a very short one. But getting over the 298 area would be basically another area where you could get into. Relative strength line isn't far from highs. Again, showing some solid growth. This has been a steady, strong performer, and there's a number of other names in the discount space that are doing well. And so this is one that should definitely be on people's radar.
Yeah, it's pretty hard to find retailers when you look back over the past 8 quarters just to see growth like this. I mean, there's usually a misstep here, a misstep there, but Burlington definitely has one of the most consistent track records of top line growth right here and bottom line growth as well. All right, our final stock today is going to be a little known software name in the financial area called Vertex. VERX is the symbol here, and really seeing a lot of price and volume, a lot of stock charts looking like this one. Good solid breakout, holding gains, holding above major support levels.
Yeah, and this one on a daily chart, it's been trading right along the 21-day line for a few weeks. You probably would need a couple more weeks before you could see a base, and it'd be great if it could consolidate to sideways because the 50-day line, 10-week line might come up. Vertex is part of the software group and financial software group, and that's 15 out of 197. It's a strong group, and this is one of the leaders. You can see a lot of these little black hash marks above some recent last few weeks ago, and those are some ants. and like registering like some strong volume. You can see the strong volume that happened after the last earnings report, and the ants are a sort of a mixed signal. On the one hand, it could say, well, it might be a topping symbol, a sign, and you may want to be thinking about taking profits right away, but you want to pay attention to see it can form another base or and be ready to that. So it did show these ants. It did soon after that top, but it hasn't given up much ground. So maybe it's going to form a new base, or maybe it'll find support. Here's the 21-day line, maybe the 10-week line. Some pretty solid numbers here down below. Should be strong growth next year. So again, these are some nice setups here. There's a lot, there aren't too many stocks that are setting up. A lot of things are really extended, but these are some names that are showing some strength and constructive action here in the waning days of 2024.
Yeah, I mean, definitely, like you said, some headwinds out there, rising interest rates. We've had breadth that hasn't been all that great. Recently, you had excessive bullishness among newsletter writers. So far, so good, though. The market is holding up. But as we discussed on IBD Live this morning, the market of stocks looks pretty darn good out there. Still a lot of names, small, mid, large cap, holding support, trading tightly near highs. So that's good for the stock market bulls. But again, we're just going to continue to monitor distribution days in the major stock indexes and look for signs of institutional selling. It's been pretty mild up to this point. But all right, Ed, I'm going to say goodbye now. Thank you very much, as always, for your insight. And then I'm going to stop my share here and remind people that don't forget to check out IBD Live tomorrow morning, because we've got a great guest, Charles Harris, portfolio manager for O'Neill Global Advisors, longtime portfolio manager, longtime holder of Tesla. So we'll get his insights on where he's at with his Tesla position. Should be a great show. I believe Ali is going to be back in the chair. Again, if you haven't checked out IBD Live, just go to investors.com/IBD Live. Got a great 3-month deal there right now. We talk about the market for over an hour every morning, talk about actionable stocks. So it should be a good show tomorrow with Charles Harris, one of our popular guests making an encore appearance. So that'll do it for today. I think Webby and Ali will be back tomorrow for the end of week stock market today video. That'll do it for today. Have a great afternoon, everyone.